Good morning, everyone, and welcome to today's webinar on agricultural conditions in the Ninth District. My name is Carmiana Matson. I am the Assistant Vice President of Regional Outreach and Public Programs at the Minneapolis Fed. In a moment, I'll be turning it over to my colleague Joe Mahon for the presentation. But first, I'll let you know that this webinar is part of a series of webinars we do on regional economic conditions. I'll be placing a link in the chat box to our previous webinars if you'd like to catch up, as well as to our upcoming webinar, which is on June 4th at 9 a.m. That one will be featuring construction sector activity. So we'd love for you to join us at that one as well. We will be distributing slides from this presentation, as well as a copy of the video to everyone who has registered, and that will come via email some point next week. At the end of Joe's presentation, he will be taking questions in the Zoom chat box. So if you have questions, you can type those there. And before you leave us at the end of today's presentation, we would appreciate you filling out the survey at the end to give us some feedback on what else you'd like to hear about from our regional outreach directors. Thank you so much, and I'm going to turn it over to Joe.
Thanks, Carmi. Thank you everyone in the audience out there for attending. As Carmi mentioned, I'll be presenting on current conditions in Ninth District agriculture. The source that this information is coming from is from our quarterly survey of agricultural credit conditions. Just a quick reminder that if I prefer any opinions this morning, I'm speaking for myself and not my employer, the Federal Reserve System. As Carmi mentioned, this webinar is part of a series that we're doing in an attempt to disseminate our survey results more quickly and more broadly. We have a number of surveys that we do. You can see them listed here on this slide. This ag credit survey that I'll be talking about is one that we do on a quarterly frequency. And so stay tuned to our website. Carmi mentioned the next one coming up on construction conditions, and there'll be more coming in the future. And of course, myself and my colleagues are available to speak at other events too, and you can find information on how to schedule a speech with myself or one of my colleagues on our website at minneapolisfed.org. So I'm going to walk briefly through just to describe you the agricultural credit conditions survey that this information comes from. And before I get into the results for Q1 for 2021 so far, my comments will only take about 20 minutes, and then I'll leave time for questions. In case you have to leave early, I'll give you sort of my two big takeaways. One is that agricultural conditions are much improved over the last several months. In particular, agricultural income has increased broadly across our region, and the outlook for the second quarter heading into the really crucial phase of the growing season this year is pretty optimistic as well. I'll get into some more details on that in a moment. Just a quick reminder to level set the region that I'll be describing. The Ninth Federal Reserve District is the north central US. You can see here on this map of the Federal Reserve Districts. The Minneapolis Fed District covers Minnesota, North Dakota, South Dakota, Montana, and then we have portions of Wisconsin and the Upper Peninsula of Michigan. It's important to point out here that that we don't include the Upper Peninsula of Michigan in this survey because there's not it's not a heavily agricultural producing region given the climate and soil there, more concentrated in forestry and mining and other natural resources industries in the UP. So really just those 5 states that you see to the west of the UP is what I'll be covering. So what exactly is this survey that these results are coming from? It's a quarterly survey that we conduct among member banks, so and particularly those concentrated in agriculture. So a couple sort of limitations, grains of salt that you should keep in mind as I walk through these results. This isn't really a random sample. We call it a survey, but it's really more of a poll. So we don't take a random sample of farmers around our region and ask them how conditions are. These are bankers in our region who are concentrated in agriculture. And so we think of them as being as being experts. They know their communities very well. They know their customers. And our definition of concentrated here is when they have more than 20% of their assets, their loans, concentrated in agriculture. We do this survey on a quarterly basis, and as I mentioned, though it's not a random sample, in fact, we survey the same bankers every time. We get a pretty consistent response rate across them, so we really hear from the same contacts on a quarter by quarter basis, which gives us a nice apples to apples comparison over time because we're checking in with the same folks. Another sort of limitation to keep in mind is that the results I'll be showing you for the district and for the individual states are really just simple averages of the responses that we get in the survey. We don't weight the responses by the size of the geographic region they cover or their portfolio size or anything like that. We just, whoever responds in a given state, we throw them in the pool and average them together. So just a couple limitations to keep in mind. But that said, it's a fairly informative source we have to kind of take the pulse of agricultural conditions in our region on a regular basis. And if you know the region, you know that agriculture is a pretty important industry here in the 9th District. So a quick rundown of the results that we found for the first quarter. One other thing that I want to make clear at the outset, I'm going to be talking about our first quarter results. So this covers the period from January through March of 2021. But we actually conduct the survey after the quarter is over. So most of the responses we got were in mid-April. So they're fairly recent and they're backward looking on the first quarter. And most of the comparisons I'll be making are to the first quarter a year earlier. So to Q1 2020 versus Q1 2021. That's going to be the kind of basis of comparison. That's important in agriculture because it's such a seasonal industry. So as I said earlier, a very strong majority of lenders reporting that incomes rose in the first quarter on an annual basis compared to Q1 2020. Also increases in capital spending and household spending by farm households, but those were up a little bit more moderately, or at least the percentage of lenders that told us those increased were a bit more moderate, but up overall. Coincidence with growing incomes, we saw higher rates of loan repayment, lower rates of loan demand, and renewals, rollovers of existing loans. And we asked them, when we conduct these surveys, we ask them what happened in the previous quarter and what their outlook is for the quarter ahead. That's the one we're in right now. So for the outlook for April through June of this year is pretty positive. The reasons that lenders offered in comments for why their outlooks were positive mostly focused on the sustained increase and improvement in crop prices for the core agricultural commodities produced in our region, as well as good yields and production from 2020, leading to bountiful harvests to continue marketing, and of course the continued government aid that persisted through 2020 that bolstered farm balance sheets during those last few difficult years. Those are all the sort of reasons they cited. One notable thing that developed in this survey relative to our last two is we saw a pretty substantial bump in farmland values and as well as cash rents. I'll show you some more information on that in a moment. And just to kind of round out some of the optimism, there are some concerns in some areas about severe and lingering and growing drought conditions. I'll talk about that a little bit at the end as well. So just to kind of run down some of these results, I mentioned that that overall lenders told us income increased. In fact, a very large portion of them told us that Q1 incomes for farmers were up relative to a year earlier, 87%. Hardly any said that incomes fell. And this is dramatically different, as I'll show you in the next slide, from what we've seen over the last several years. Also growth in capital spending. You can see at the bottom line here, more than half of lenders told us that purchases of machinery and equipment and buildings by farms had increased relative to a year earlier. Only 6% reported that capital spending was down. Again, a reversal of what we've seen over the last half decade or so of persistently low crop prices. And household spending up as well, although the largest share told us that it was steady. And this is a kind of an interesting reversal from what we've tended to see over the last several years as incomes have gone down. Capital spending has followed incomes pretty closely. Household spending has held up a little bit better. So it's interesting to note that as we've seen this bump in income, not as many lenders telling us that farms are increasing their household purchases. That seems to be a little bit more stable over time. So just to kind of put the recent results in a longer context, I have plotted over the kind of history that we've been doing this survey since the late 90s, the percentage of lenders that told us that incomes in their area increased or held steady over the previous 3 months. And you can really see just that over the last 2 quarters, you can see the last 2 blips on this chart here. We're seeing that percentage jump back up to levels that it was during really the last farm boom in the early part of the last decade, when crop prices were really strong. International demand for American agricultural output was really strong, and we saw that kind of sustained farm boom in the early 2010s. And we're seeing we've seen the percentage of lenders reporting increased income jump back up to those levels. It's anyone's guess how sustained this will be going forward, because we only ask what outlook is for the next quarter. As I mentioned, in times when farmers and other agricultural producers tend to see their incomes increase, they have lower demand for loans, and we saw that reflected in the most recent survey. So more than 2 in 5 lenders reported that loan demand at their banks decreased relative to a year earlier. Coincidentally, repayment rates on loans increased, so the percentage of farmers that are making current, or in fact making advance payments on their loans, jumped. Only 3% of lenders told us that repayment rates were down, and renewals that rollovers of existing loans into future periods has held pretty steady. 2 in 3 lenders told us there was no change in renewals. As with loan demand for loan renewals tends to go up when incomes are strained, and so this is kind of what you would expect given the improvement in farm incomes. Turning to the outlook is for really more of the same, slightly more moderate, but we still have nearly 3/4 of lending expecting farm income in the second quarter, in April through June, to be up relative to the second quarter 2020. A smaller percentage then told us that it increased in the first quarter, but still a pretty strong majority. Household spending looking a little bit more flat, and capital spending, the outlook for capital spending is almost identical to what they told us happened in the previous quarter. So the outlook for purchases of agricultural equipment still looks pretty strong. And I'll add incidentally that we're hearing a lot of anecdotes about it being difficult to purchase capital equipment because of long lead times for some of the inputs to ag machinery, and some of the same logistical and supply chain issues that have been affecting other parts of manufacturing are affecting the equipment market as well in agriculture. Not surprisingly, the outlook for loan demand also fairly moderate given the strong incomes. We do have about 1/4 of lenders expecting an increase in loan demand in the second quarter. Repayment rates still expected to increase over the coming quarter, and renewals just about flat as with Q1. Over this period, we also saw a continued downward movement in agricultural interest rates, kind of following interest rates more broadly in banking. We've seen agricultural interest rates come down to their lowest levels in quite some time. I've only plotted this back about 5 years, but you can see they've been on a fairly steady downward trend since about early 2019. And we saw them tick down a little bit further for all varieties of loans. I have here just operating and machinery loans, and I have both for fixed loans and variable interest rate loans. You can see those have trended down for all categories. We also ask about real estate loans. Interest rates on real estate loans are down as well, but you can see these move pretty closely together. So I wanted to keep this chart a little bit easier to read, but that follows the same pattern as well over this period. Interest rates, they did tick down, as I mentioned, in the quarter, not as much as they had in the 2 quarters prior, but they still did tick down a little bit, and at least 10 basis points for each of these categories. So one interesting development that we found in this survey is a pretty strong upward movement in land values. So we ask these lenders what an acre of land, good land, is going for in their areas. And because we did track respondents over time, we can compare to what they told us the price of an acre was a year ago. And so we do these annual comparisons. And what we found, I really want you to pay attention here to that top line figure for the 9th district. We found a nearly 7% increase year over year in the price, average price of an acre of farmland for the whole 9th district. I want to give you a little bit of caution about those two big decrease figures that you see for Montana and for Wisconsin. As I mentioned, we're only looking at a subset of the respondents when we ask about this question. We're only looking for responses from those who replied in both the first quarter of 2020 and the first quarter of 2021 in this case, so we can get an apples to apples comparison for that baseline for land values. And so we already have a relatively small number of respondents from Montana and from Wisconsin in the survey. And then when we trim that number to those who happen to fill out the survey in both of those periods, it gets even smaller. So those state level estimates really for all of the states in our region, but particularly those two, tend to be a little bit more noisy. They're a little bit more volatile. So I wouldn't put too much weight on those two figures or really any of the state figures. We do get more responses from Minnesota and also from North Dakota and South Dakota as well. So take those for what they're worth. I would really pay attention to that overall figure up top, though. 7% increase in average land values across our region is a level of increase that we haven't really seen since the early part of the last decade when land values were really booming. Just to kind of put a little bit of historical context on this, we did see into the late 2000s and early 2010s a really significant run up in farmland values over that period, double-digit increases in some states year over year. In fact, North Dakota one year logged close to a 30% increase in land values in some areas over that period. There were concerns at the time about whether those values were sustainable, whether we might be seeing a bubble in land values. And what we saw as the prices for crops and farm incomes leveled off once crop prices started to retreat from their peaks. We saw the pace of growth in land values level off, and then it's actually come down a little bit relative to its peak. This is per an annual survey that the USDA puts out. So really over the last few years, we've seen some downward movement in land prices around our region and across the broader Midwest Heartland region in land values. And so this is actually, we have seen some other quarters recently where there's been some indications of a little bit of a recovery or upward movement back up in land prices, but this is really the most substantial jump that we've seen in quite some time. We also ask about cash rents. So as a lot of you would probably know, there are a lot of operators who farm on land that they don't own, that they rent from their neighbors. So we ask about what land rental contracts are going for on an acre by acre basis in the region. And just as we do for land values, we can track these over time by looking at how the same respondents replied over time. And this is also noteworthy because not only did we see a significant increase in rents over the period, but actually rents increased more than land values, which over time, if you look at these over time, rents and land values tend to move together. But during these that sort of boom period I was mentioning earlier, where land values were really growing rapidly in the early part of the last decade, land values were going up much more than rents. So it's pretty interesting that values were growing at a slightly slower pace than rents over this period. Again, I am giving you state numbers here just sort of for interest purposes, because I know you might be interested in what's happening in your area, but I want you to take those with a grain of salt, particularly, again, that really big increase in Wisconsin that you see that reflects responses from really only a very small handful of lenders. And again, I want you to just kind of focus more on the value for the district as a whole. Just to kind of wrap things up before I get to questions on one sort of dire note, it wouldn't be I wouldn't be being complete and honest if I gave you just an entirely optimistic picture. We did hear a number of concerns expressed among respondents about growing and worsening drought conditions in our region. Particularly, we heard this from contacts in Western North Dakota and South Dakota. And as you can see here on this map, per the NOAA climate, per the NOAA drought map from last week, that region up in the sort of central part of the 9th district is now in extreme drought conditions. And this has been going on for some time. It's spreading now into to the Red River Valley region, as you can see on this map. Not as dry in that region yet, but this is something that we're going to keep our eye on over the growing season, because that could really affect how things go over this year. And as always with agriculture, it's a business that's heavily dependent on the weather, and so that's one thing to keep in mind, and one thing that we'll be paying attention to going forward. And with that, I'm going to wrap up and take questions.
Thanks, Joe. If folks have questions for Joe, you can type them in the chat box at the bottom of your Zoom screen. And Joe, I'd like to start out with this one. Besides drought, which you just mentioned, are there any other threats on the horizon, other things you're seeing in the outlook? Someone in the chat box mentioned maybe the rampant disease in the Chinese hog herd last year. What else are you concerned about?
Yeah, that's something that particularly the Chinese Chinese hog inventory concerns, something that I've been paying attention to. We didn't get any comments about that this time, but that's just something to kind of be aware of. That's been going on for some time now, and that's just for sort of general background. That's kind of an important issue because the Chinese buy a lot of soybeans, particularly from our region, to feed their stock of livestock, and particularly hogs. So to the extent that we've seen pretty massive animal fatalities in China, that would translate to reduced demand for soybeans. We didn't get any specific comments about that in our survey. More broadly, just kind of general concerns about overall uncertainty in the sector. It's been a really difficult few years in ag, really almost a decade now since we saw the peak in crop prices. So there's concerns about whether this is sustainable, whether the price rally that we're seeing is susceptible to a lot of volatility like we see in other financial markets. And also, I would point out, we did get a few comments about the role that government aid has played in bolstering farmers' balance sheets over the last few years. Now we're starting to see more organic growth, pardon the pun, I guess, from improved harvests and crop prices. But there's concerns about sort of the sustainability of this rally once that aid starts to dissipate as conditions improve in agriculture.
Joe, do you think that the drought issues are impacting land values, particularly in those areas that are experiencing more drought?
It's hard to say whether they're having any impact on land values yet. I mean, certainly the overall results that we're getting from those states indicate that market for land is pretty strong right now. It's whether how that develops going forward is anyone's guess.
There's a couple of questions about survey design. One, does the survey include ranching?
It does. Yeah, I don't include a lot of results specific to livestock and ranching, but we do ask, so we ask about land prices in particular for several categories of land. We ask about non-irrigated farmland, which really makes up the largest class of land in the eastern part of the district here. At least. We also ask about irrigated farmland, and we ask about pasture land as well. So we do have some results on pasture land. If you're interested in that, we mentioned those in our write-up, which is available on our website at minneapolisfed.org. We did see ranch and pasture land values increase overall in the district, but not nearly as much as non-irrigated farmland values. So we saw a small increase in ranch land values.
And someone actually did ask about the irrigated land value. Did you see anything there?
Those were much more stable. Those were hardly changed at all.
All right, thank you. Another question, just more about survey design. Do you have a sense that farmers are getting more of their loans from non-bank lending sources? Is that contributing to the lower response rate?
That has been an ongoing trend. We did get more comments about that this time. Bankers a little concerned that some of their competitors, in particular dealer financing, they're able to offer more attractive interest rates than they are, and even more so, more attractive terms on loans, repayment terms, collateralization, and things like that, that bankers, because of the regulatory environment in which they operate, aren't able to do. That's been a concern we've heard about on an ongoing basis for a long time. I wouldn't say that anything's really changed significantly in that space. But yeah, we do hear about those concerns.
And
in
what
terms
about,
of, I'm sorry, in terms of the response rate, we have seen a decrease over the long term in the number of banks that we're hearing from on this survey, but I wouldn't really chalk that up to the influence of non-bank finance. I would say that's really more a phenomenon of the decrease we've seen over time in the number of banks in our region.
right. Questioner is mentioning that there's significant turnover of farms and farmland that is projected over the next 10 years. And are banks showing any concern over that, how that will take place, who will take over, how they're going to manage financially?
You know, we don't hear about that a lot in this survey, but I hear a lot about it in my conversations with agricultural contacts and with agricultural lenders. There are a lot of elderly farmers in our region. This has been something that's been on people's mind for a long time, this issue of succession, whether or not you'll be able to get the next generation to resume, take over agricultural operations. How are you going to attract more people into farming? I wouldn't point to any new developments in that area that we can really cite from what we see in the survey results, or just what I hear kind of qualitatively in my conversations. That's just been an ongoing concern.
How about trade policy? Continued tariffs, are they impacting sentiment, outlook? Do you have any data on that?
You know, if anything, one development we've seen over the last 6 months or so is some improvement in exports to China in particular. So the tariff environment was a major concern over the previous few years prior to 2020, when really the pandemic started really looming large. But because of some easing in terms of trade with China, we've actually seen some, and also because of that those hog herd problems they're having in China, we've seen some increased actual animal exports to China and pork exports, as well as increased purchases of American commodities. So that's still a concern that people have, because farming is a global industry, but it's not something that I think is really bubbling to the fore right now, at least just reading the comments that we get on the survey.
Thank you. Do we have a sense for owned versus leased land and duration of leases, long-term versus short-term?
Not really, no. I mean, the thing, there's this thing that we do where we ask about land rents on a quarterly basis, but those contracts tend to be renegotiated every few years and at the same time of the year. So this is actually the time of year where we really see a little bit more movement in those, because it's a time when a lot of these leases come up for renewal. I can't really say much about whether the duration of leases has been changing over time. I think those are fairly standard, but I really don't know. I mean, I think those contracts tend to be for like a 3-year basis.
Thank you. We've got lots of questions in the chat. I'm afraid we won't have time to get to all of them today, but thank you to those of you who have submitted them. Maybe we'll just grab 1 or 2 more. And I will again point out, we are going to send a copy of this recording and Joe's slides to everyone next week via email. We'll include a link in that email to the full results of the report. So Joe, how about access to credit for minority-owned farms? Do we look at that? Do we have any data on that?
Not really. Again, not really from the ag credit survey, but this is kind of an interesting area because to follow, because particularly in Minnesota, we're starting to see more movement into farming among both immigrant communities and among people of color. But I really can't, there's not much I really have to offer on that right now. That would be a really interesting subject to kind of investigate a little bit more systematically. So I don't have anything more tangible to say about that other than we are seeing, based on some of the demographic information from the USDA, that at least in some areas, the population of agricultural producers is getting more diverse. So how sort of newer farmers use credit is kind of an interesting question to look into going forward.
Thanks. Well, we'll just throw in one last question here before we close. How much do you see higher crop prices impacting livestock producers? Since, of course, higher corn and soybean prices drive cost of production.
Yeah, so that's kind of an interesting one. The responses that we got from lenders who primarily serve livestock and dairy producers as well, because crops are an input into dairy production as well, we're pretty positive overall over this period. Now, those prices, our livestock and dairy prices, haven't seen as much of a rally as crop prices over the period. So you would think, you would think, sort of absent any context, that an increase in their input costs going along with a lower increase in their prices would squeeze their margins a little bit. It happens to be that a lot of our livestock and especially dairy producers are kind of diversified and also do some farming as well. So while there are some large operations that are just concentrated in ranching, for example, a lot of ranchers tend to also do some crop production. So a lot of big producers are pretty diversified and are able to benefit from the growing commodity prices as well.
Great. Thanks, Joe. And thanks to all of you for spending some time with us this morning. I'm sorry we couldn't answer all of the questions in the chat, but we'll definitely follow up via email with some additional resources. And we hope that you'll fill out our survey at the completion of this webinar. Thank you so much, everyone. Have a good day.
Thank you.